Okay, those were some of the big voices invested in India reacting to the Fed's status quo policy and the dovish statement. Let's also analyze the micros then at this point in time. Mayuresh Joshi from Angel Broking is with us. And Mayuresh, evening, I want to pick up the point on the kind of rally that one has seen in Friday's session within the interest rate sensitives, the likes of the entire realty pack, or for that matter, the banking pack. What is it indicating? Is the market now assuming that we will see an interest rate cut from the Reserve Bank governor this time?
Evening, Aisha. Clearly, I think looking at the incidences happening in the past and the Fed holding rates at status quo, the pressure is back on the RBI governor to probably do some policy action, at least in this policy meet. So yes, I think the markets are very, very hopeful of seeing some amount of rate cuts start happening in this cycle. But clearly, I think one needs to understand three important aspects of a sharp recovery, specifically in relation to the Indian economy. The rate cycle is very, very important when it probably comes to how the lending pattern of a lot of corporates will go and easing of the working capital constraints that they are facing. But I think corporate earnings recovery is the basic tenet for re-rating of Indian markets. So I think that is not something that we've seen that might happen so soon. So next couple of quarters at least, I think expecting sluggish growth to come through in terms of earnings happening at least on the domestic scene. And yes, I think the fall in commodity prices that we've seen, the positive effect will be seen in the second half. The benign prices will definitely reflect in margin expansion of a lot of Indian corporates. So we do remain hopeful from a medium-term perspective on the recovery story structurally on how earnings will pan out. But at least from a short to medium-term perspective, a lot got factored into. I think the markets were factoring no rate hike happening from the Fed. And again, I think the market is expecting some action happening for RBI in the September policy. So to a certain extent, I think at least from a short-term perspective, we still maintain that the Nifty would stay in a range. The broader range would be 7,500, 7,600 on the lower end of the Nifty and probably 8,200, 8,300 on the higher side.
That's the view coming in on the entire real estate pack. But also on the market overall, Mayuresh, what is the sense that you're getting? I mean, the market almost flattered to deceive us, 80-50, and then it fell all the way back below 8,000 at a time when the rest of the globe was sort of not joyous. You had all of Europe, which was seeing cuts of about 1 to 2% Does it seem like this was just a knee-jerk reaction only to profit take?
So clearly, I think the kind of moment that we probably witnessed today into the markets were more factored in, as I mentioned earlier. I think the markets were expecting to a larger extent of the Fed not moving, considering the global condition and what we saw in China and the emerging currencies in general. So clearly, I think on this front, I think the market had just stated that nothing will probably happen. And again, the uncertainty lingers around on what might happen with the December policy. Clearly, I think what it also poses as a threat is global growth tapering off, which might not be seen as a precedent for earnings recovery even globally. So except US, where the data has been extremely strong, I think the other markets are struggling. Europe is struggling. China clearly struggling with the kind of data that we've seen. Earnings, as I mentioned, in India will take at least a couple of quarters. Emerging currencies elsewhere have taken a big knock. So in my opinion, again, clearly, the earnings momentum is something that will drive the market. So I think the trading move might probably continue till expiry, at least for this series. But again, I think we believe that the market will get capped around the 8,300 odd level on the Nifty.
Okay, the other big factor, of course, was the kind of strength that we saw in the currency markets. The rupee climbed up a fair bit in Friday's trading session. Let's bring on board Manisha then to get us more perspective on whether or not this was just a knee-jerk reaction, Manisha, when it came to the currency, or are the gains likely to stick by?
Well, the Fed holding interest rates has had its desired impact. The risk in sentiment is on. You have seen the emerging market currencies run up. The rupee, of course, has been the best Asian performer there. You have seen the best weekly gains since the month of January and the best intraday gains as well coming in since May 2014. Other factors which have been supportive are the fact that you saw the Indian equities, the regional equities also gain up. The US dollar index is trading at a 3-week lows, and most of the emerging market currencies have been trading on the positive. Having said that, if you look at the bond markets, the 10-year bonds also put in a biggest gain since August 25th. The yields in the meanwhile have dropped highest since August 14th there. The markets are, of course, betting on the RBI now moving into this month itself. 25 basis points of a rate cut has been already factored in. It has been the easing inflation, the growth numbers, the CAD numbers, all of that coming in onto the positive side. Going ahead, though, the markets would watch out for the Bihar election, the corporate earnings, and China. All of that will come into focus. But whether or not the currency will stay firm, well, not too many people are betting on to that. Standard Chartered says that they still look at 67 as a year-end target for the currency. Morgan Stanley has come out with a report saying that they look at strong US dollar and weakening currency, and they do not rule out 69 on the rupee as well.
Okay, let's take a quick break then on that note. When we come back, analyze the mid-cap end of the market, cues from New Delhi to look out for come next week, and of course, a picture of the futures and options series as well so far, considering come next week, we're going to be dealing with expiry as well. Back with your trades right ahead on ET Now, and still in conversation with Mayuresh Joshi from Angel Broking. Fed decision out of the way. The broader markets clearly cheered the move as well, with the mid-cap index gaining in excess of 1%. Of course, it has to be said that it came off as well quite a bit from the top of the day. But let's talk about some of the interesting movers. Avan starts off with SKS, and Avan, SKS quite clearly a complete smackdown.
A smackdown in how, Aisha? In fact, the fact that it didn't get the small banking license did not go down well with brokerages. Morgan Stanley downgraded it to equal weight, cutting the target to 480, saying that the move constraints will be for the long-term growth for SKS, and the derating is likely on the small bank license miss. Even UBS downgraded it, cutting the target to 500, saying that this changes the landscape to negative for the long-term, and regulatory risk could also hurt loan growth for SKS. ENIL was very active as it participated in the Phase 3 e-auctions, emerging as a solid winner, getting a total of 17 licenses for 339 crore rupees. It also bought the Amritsar, Patiala, Shimla and Jodhpur stations from TV Today, which will now be branded as Radio Mirchi, so now available in 43 cities versus 32. Bharat Forge saw the way down of the Bank of America report, cutting the target to 900, maintaining underperform, saying that the non-auto exports are a big concern, and the steel cost pass-through and worsening mix could also hurt the margins. And Just Dial, it launched Search Plus. It was for search and transactions, and that went down very well. In fact, Morgan Stanley said that the new app launch is a very important milestone for the company.
Okay, Avan, we're going to leave it at that. In fact, now that we're done with FOMC next week, and it's going to be expiry as well. Darshan, what are the cues that the F&O space is sending us, and what sort of movement can we expect in the market come next week?
See, the handover into next week is pretty good at this point of time. The Nifty, Bank Nifty, both of them moving post the FOMC decision that came in not to hike rates in this policy meet. The Bank Nifty was the one that rallied significantly, and this comes on the back of, because of a non-hike of rates in the US, that still gives a headroom for our governor to actually cut interest rates. So that was the big positive that came in, and the Bank Nifty stocks rallying in today's trade. Interest rate sensitives as well as some of the real estate counters, infrastructure counters, high beta counters started to move, because the companies where there is high debt and there is a chance of an RBI cutting rate, all these companies will benefit. So all these counters moved in today's trade. If you're looking at it, rollovers haven't picked up steam. It will take some time, probably from Monday. Rollovers will again start picking up, both for the Nifty and the Bank Nifty. Now, as far as this series is concerned, we've wiped out the losses. So the Nifty is up 0.5% this series, the Bank Nifty is up almost 1%, and the CNX IT is outperforming almost 2.5%. Put writers are much more aggressive this time around. The Nifty PCR is much higher, and what we're seeing is that heavy put writing at 7,900 and 8,000 does give an indication that there is support coming in at lower levels for the market.
Okay, Darshan, we're going to leave it at that. And Mayuresh, I want to come to you. Any stocks or ideas which are looking interesting at this point in time?
Oh yes, Aisha, I think across sectors we do like a few ideas, but specifically, again, within the banking pack, Axis Bank is something that we continue to like. After the sharp fall we've seen, our take is that the bank has a very strong Tier 1 capitalization ratio of 12.2%, the ROE is in excess of 1.8%. Even if you look at the loan formation, 40% of the loans now are accounted by retail loans, and the majority of that are secured. Clearly, if you're looking at asset quality formation, the stress loan formation is expected to be much lower than 5,700 crores witnessed at FY15, which is a big positive. The PCR stands at 78%. Clearly, the cost to income ratios are quite low, and clearly, if you're looking at credit costs of 80 bips over the next year or so, I think you're still looking at an earnings growth of in excess of 21% over the next 2 years. So clearly, I think Axis is something that we continue to like. On a price to book parameter, trades around 2.2 times FY17 earnings. So our target stays at 705 for Axis Bank from a 12 to 15 month perspective. The other stock that we are liking is Aurobindo pharma from the mid-cap pharma space. Clearly, the numbers have been quite encouraging in the quarter gone by. And if you look at the simple bifurcation of the formulations business, which now account for 80% of its overall sales, Actavis and Natural's acquisition will help it in good stead. 379 ANDA applications, 201 approved. The company is expecting 18 injectables to go through, and clearly I think that is a high margin business that will entail higher margins for Aurobindo over the next couple of years. Our own take is that earnings growth in excess of 11.5%, 16,500 odd crores over the next couple of years. Margin expansion happening for $70 billion worth of products are going off patent in US over the next 3 to 4 years, which is a huge generic opportunity for players like Aurobindo Pharma. And clearly, as I mentioned, I think the acquisitions of Natural and Actavis, which gives it key entry points into the injectables and the OTC segment, are going to be key monitorables. So clearly, I think at the current valuations is looking extremely attractive. So a target of 872 for Aurobindo over the next 12 to 15 months as well.
Okay, Axis Bank as well as Aurobindo Pharma, the two investment ideas coming in from Mayuresh Joshi. Mayuresh, always good chatting with you. And come next week, we're going to keep a keen eye on what's happening in New Delhi as well, the key cues in New Delhi that could determine trade on D Street as well. Supriya Srinath joins in with more details on that. Supriya?
The top cues from the capital really center around Prime Minister Modi and what he does on his 5-day trip as far as the United States is concerned. He's crisscrossing the country, all pun intended, from the East Coast to the West Coast. But it's in New York that he delivers that UNGA speech. And then, of course, he's likely to meet 30 top global CEOs. That includes the likes of the CEOs from Pepsi, DuPont, Dow Chemicals, Lockheed Martin, GE, to name just a few. And the push really there is going to be the Make in India campaign. I mean, how does government really plan to enable environment as to boost manufacturing in India? That has really been Achilles' heel, so to say. The second leg of his visit is really the one where he's going to be meeting the rock stars of the Silicon Valley, and that's where he's going to be pushing the Digital India initiative of the government. Again, something that centers around broadband availability, something that centers around electronic manufacturing. So, you know, markets are going to be keeping a close eye on the commentary that he makes in the United States in this 5-day trip that he does there. Away from all of that, I think markets will be very keenly watching the efficacy and the success of the Congress agitation against the land laws, because this will give everybody a sense of the public outrage, if at all there is any, against the land laws, and how difficult will it be for the states to implement this at all. I mean, that's an enabling environment that has been made for the states. Can they really go ahead there and execute it? And away from all of this, I think progress of the Bihar elections, how does the BJP fare in there on the 160 seats that it's contesting along with its allies at the 243-member assembly? I think that's something that markets will be very keenly watching out for, because this is going to set the trend whether or not the reform agenda will be accelerated or whether it's going to receive a further setback.
That it sure will. Supriya, many thanks for that update on cues to look out for from the capital. With that, we'll wrap it up on this edition of Your Trades. You have a good weekend. We'll catch you with all the market action on Monday morning.